Hello and welcome to A Accounting Tutorials. We are continuing our lesson on accounting for branches, that is branch accounts. In this particular video, I want us to take a full practice question on how to prepare branch accounts in the book of the head office. But remember that in the part 1 of this video, we've already looked at the basic or introductory concept of branch accounts, the formats of branch accounts in the book of the head office. But this time, I just want us to take a comprehensive question, solve it together to understand how branch accounts are prepared in the book of the head office, that is under the debtors system. So if you're new to this channel, I will encourage you to subscribe to this channel, turn on your notification bell so that any moment I upload any new video, you'll get notified on your devices. Now, let's quickly go through the question together and let's see how best we could solve this question. The head office of A Limited is in Nairobi, Kenya, and a branch at Mombasa, Kenya. All branch records are kept in Nairobi. The information below relates to the Mombasa branch for the year ended 31st December 2024. We have particulars and the amount. We have inventory at the branch on 1st January 2024 is 15,000 Ghana cedis. We have debtors at the branch on 1st January 2024, 30,000. Petty cash at the branch on 1st January 2024 is 300. Goods sent to branch during 2024 at cost 252,000. Cash sales 2024 60,000. Receipt from debtors 2024 210,000 Ghana cedis. Credit sales during 2024 is 228,000. We have checks sent to branch during 2024 for salaries is 9,000. For rent and rate is 1,500. For petty cash is 1,100. We have inventory at the branch on 31st December 2024, 25,000 Ghana cedis. We have petty cash as at 31st December 2024 is 200. We have goods returned by the branch, 2,000 Ghana cedis. And finally, we have debtors on 31st December 2024 being 48,000 Ghana cedis. Required: prepare branch account in the books of the head office. Now, after going through the question, the next thing to do is to critically analyze this question. Now, the head office is located in Nairobi, whereas the branch is located in Mombasa or in Kenya, means this is a domestic branch, not a foreign branch, because both the head office and the branch is located in one country, that is Kenya. Now, the next question we have to ask ourselves, is it a dependent branch or independent branch? We are told that all the records are kept in Nairobi, and Nairobi is the head office. It means that it is the head office that keeps all records of the branch. If that is the case, then we conclude that this is dependent branch, because dependent branch, they don't keep their own set of books. It is the head office that keeps records on their behalf. So we've established that. If that is the case, then straightforward, we should conclude that we are only going to prepare what we call branch accounts in the book of what? The head office. First of all, let's take note that we are required to prepare what we call branch account. So we write our branch account for the year ended 31st December 2024. But take note that we are preparing this branch account in the book of the head office. So we write in the book of head office. Good. Now I bring my currency sign is Ghana cedis. Bring my currency sign is Ghana cedis. Now, looking through this question, the first transaction to record is the opening balances of assets. I explained earlier that in preparing branch accounts in the book of the head office, you have to first record the opening balances of asset and liability. But in this particular question, we don't have opening balances of liability. We only have opening balances of assets, and we have to record that. And all opening balances of liabilities are debited to branch account, and there is a reason for that. Listen, asset has a natural debit balances, right? So if the asset is to be closed and recorded in branch account, it means because they have a debit balance, we have to credit the asset account in the name of branch and come and debit what we call branch account in the name of the assets. So the first asset here is the inventory. So we record inventory, but remember this inventory is the opening balance and the amount is 15,000. Good. The next is debtors. Debtors opening balance is 30,000. Then we have petty cash. Yes, the opening balance is 30,000. So petty cash is 300. Petty cash is 300. Then that is all with the assets. The one thing I want you to take note is that these assets are the balance brought down. They are the opening balances. So I said to balance brought down because they are the opening balances of assets. Now, if they were liabilities in this particular question, the liabilities opening balance should have been credited to this account in order to determine the equity of the branch or the net worth of the branch. Is that okay? But take note that we are basically preparing this branch account in order to determine the branch profit or loss on this transaction. Is that okay? If you're able to determine the branch profit or loss, then we will be able to assess the financial performance of this branch and compare it with other branch in order to decide which branch should be continued operation or which one should be discontinued. That is a function of strategic managers to take care of. Now let's do the accounting terms. Now, the next item to talk about is goods sent to branch. Now, whenever goods are sent from head office to branch, it means the branch is receiving. So we debit branch account in the name of goods sent to branch. The double entry is that we credit goods sent to branch account and debit branch account. So we come and debit branch account in the name of goods sent to branch. And the cost is 252,000. Very good. Now the next on the list is cash sales. Okay, wherever the goods sent to branch are sold out, we have to credit the proceed we have to record the proceed at the credit side to compare the sales against the cost of the goods transferred in order to determine the profit or loss on the sales made. Now, so the sales will be credited to the branch account. So we have cash sales. The cash sales from the question is 60,000. We record that. The next is receipt from debtors. The cash receipt from debtors is as a result of credit sales. So when we sell goods to customers on credit, the proceed or the cash we receive from them is what we call the receipt from debtors. So that will be recorded at the credit side. So receipt or received from debtors. And the amount over here is 210,000. Good. Now, the next is credit sales during 2024 is 228,000. This credit sales will not be recorded in branch account. There is a reason for that. We are comparing the cash receipt against the cost of the goods transferred to the branch. So we record what is received and not the total credit sales. So credit sales will not be recorded until the credit sales has been received. Is that okay? The next is check sent to branch during 2024 for salaries. So when check or cash is used to pay expenses, that is when head office paid expenses on behalf of the branch, we debit the branch account with the expenses. Listen, expenses has a natural debit balance. So if you are to record them in branch account, we have to credit the expenses account in the name of branch and debit the branch account to complete the double entry. So you say that to bank because it is check, okay? And we have salaries, and the salaries is 9,000. Then we also have rent and rates. Rent and rate is 1,500. The next is petty cash. A petty cash is 1,100. Now, the next over here is inventory at the branch on 31st December 2024. Listen and listen very well. Now, because we record the opening balances of asset at the debit side of branch account, the closing balance of asset will be recorded at the credit side of the branch account. And I also told you that if we have opening balances of liability to be recorded at the credit side, then the closing balance of liability should have been recorded at the debit side of branch accounts. Now, we don't have liabilities, we have assets. So because we record the opening balance at the debit side, we come and record the closing balance of assets at the credit side. But take note, if the asset is non-current asset, make sure you record the depreciated value. I mean the net book value or the carrying amount. But these assets are all current assets, not a non-current asset. So we have inventory. But before we record the assets, the closing balances, there are one item which is goods returned by head office. Sorry, goods returned by branch. Whenever the branch return goods to the head office, the goods sent to branch has to be reduced. Because of that, we have to record that at the credit side to reduce the goods sent to branch. Okay, so we will have goods sent or goods returned. Sorry, this is goods returned by branch. Goods returned by branch. Goods returned by branch is an amount of 2,000. I record that. Good. Now we record the closing balances of assets at the credit side of branch account. So we'll have another balance. But remember, this balance is the balance CD, the closing balance. So we have inventory, and the inventory value is 25,000. Then we have debtors. The debtors balance is 48,000. Then we have a petty cash. The petty cash is just 200 cedis. Now, after recording this transaction, I told you that we are preparing this account in order to determine what we call the branch profit or loss. To do that, we balance off this account. To balance off this account, we add the total of the debit and total of the credits and pick the bigger one as the total. So when we add all figures at the debit side, we arrive at an amount of 308,900. That's the debit side. And when we add everything here, we arrive at 345,200. The credit side is the bigger, so we consider that as the total, right? We take that as the total. So that is 345,200. So 345,000 200 as the total. Now we've added the debit side and we had 308,900. So the difference is 36,300. We are recording at the debit side because the debit side is smaller than the credit side. So this difference is what we call the branch profit. Okay. Note this branch profit, okay, um, will be transferred to profit and loss account and it will be credited to profit and loss account. This will be found in the general profit and loss account. Good. Take note that if the credit side of the branch account is bigger than that of the debit side, we arrive at what we call branch profit. But if the debit side is bigger than the total of the debit side is bigger than the credit side, the difference will be found at the credit side of the branch account, and we name that branch loss. Is that okay? Good. Basically, this is how we prepare branch accounts in the book of the head office. Now, this brings us to the end of this video. If you haven't subscribed to this channel, I will encourage you to kindly subscribe and turn on your notification bell so that any moment I upload my next video, you'll get notified. In our next video, we'll be looking at what we call stock plus debtor system. This is just a debtor system where one branch account is opened in the book of the head office.